Good morning, listeners. I'm Noah Mercer, and you're tuned in to the FinMonkeys Morning Brief. We've got a busy day ahead, with the Federal Reserve's policy outlook shaping the tone, AI-related stocks taking a hit, and a quiet but steady rally in safe haven assets. Let's get into what's moving the markets and why it matters to you. First up, the Fed is expected to keep rates steady after the latest inflation data showed a bit of heat, which means borrowing costs stay predictable for businesses and consumers. Next, AI-focused shares slumped sharply today, underscoring how fragile the sector's momentum has become and dragging the broader market lower. Finally, Asian equities nudged higher on solid earnings and easing energy prices, a sign that regional risk appetite is still intact and could help lift global sentiment. So, what's framing the day? With the Fed stance out of the way, the market's focus shifts to how that stability translates into equity performance. The AI sell-off has been the biggest drag on the tech index, and with those valuations under pressure, investors are looking for other areas to balance risk. That's why you'll notice a bit of a spread between growth and value names, as traders weigh the odds of further policy moves against the reality of earnings reports that are still coming in. Across the Pacific, Asian markets are edging up, buoyed by better-than-expected earnings and a dip in energy costs that eases profit pressure. That modest rally helped keep global risk sentiment from slipping too far, even as precious metal prices climb on the back of lingering uncertainty about inflation staying high enough for the Fed to consider more tightening. Gold and silver are pulling in investors looking for safety, and that safe haven flow often signals a broader caution in the system. Turning to the sector spotlight, we're zeroing in on e-commerce software after the latest earnings season. GoDaddy posted results that matched expectations, while its peers showed a mixed bag, some beating forecasts, others falling short. Those numbers matter because they give us a pulse on digital commerce growth and hint at how much capital will keep flowing into online services as the economy steadies. In short, the earnings landscape is painting a nuanced picture of where the next wave of that's the FinMonkeys morning brief for today. The next thing to watch is upcoming earnings and any Fed commentary for clues on future rate direction. Thanks for listening to FinMonkeys. We'll be back tomorrow with the next market setup.